welcome to another riveting video for the European energy markets, this time for the week starting 7th of October 2024. My name is Marcello Kolax and I am guiding you through the markets today. All right, so it was quite an interesting week that we had last week, and we do have a few bearish reversal setups happening. And the best thing is if you just walk through the markets one step at a time. The results are also in for our weekly sentiment survey, where we ask market participants of where they think the TTF will most likely go for the week ahead. So we can see that week on week, there has not been a massive change at all. So we are still seeing that the bulls are ultimately dominating. We are near the 50% mark. However, the bears are also taking up a slightly greater share of their conviction balance. We do have fewer people that are simply unconvinced. And what we are seeing in the charts today is that on the TTF, on the hourly chart, we do have a last Thursday's tentative head and shoulders pattern was unwound on Friday. The bulls are continuing, and we did see that on the NBP hourly chart, we did have an ascending triangle that resolved higher, so that is also bullish. On the daily charts, we do see that we are now working mostly with extension targets to the upside, and we do have an ascending triangle happening on the German power markets. But what does it look like on the chart itself? So here, as always, I'm starting with a broad overview of what the market has to offer. We see that the TTF front month, the NBP front month, the TTF front season and the NBP front season all have made important new highs. So we can see that we had last week a little bit of hesitation for most of the week, but we did resolve this higher. We are seeing that on the EUAs, we are pushing to new lows. So we'll have a look at what's happening there in just a second as well. And we are seeing that on Brent, we did get a little bit of a shooting star pattern, which usually leads to some price decline. Okay, so now let's have a look at the details. The TTF front month on the weekly chart. Yes, we are still bullish ultimately within the ascending channel, so there is no debating that. And the bulls are likely to continue. Volume is strong. We see the momentum tools are strong. So are the trend tools and also the oscillators. On the daily chart, we are also working with this channel, and we can see here, yes, we are well above the 200 exponential moving average, and ultimately we are still destined to push towards 42.9. And I think looking at the bullish momentum and trend tools, that doesn't look too crazy. So here's the thing, even if we were to get a deeper correction lower, the first thing that I would do is I would start drawing in fib retracements as soon as we understand that there is a peak. It doesn't look like one here, yeah. And then I would say, okay, you know what? A down leg would start below the 23.6% fib. And then we know intuitively that shallow corrections go to the 38.2% retracement, whereas deeper corrections can go all the way to the 61.8. And this is what we did last week. So we had this bearish setup here, we pushed lower last Friday, so that's why we removed it. And as soon as we are getting the next bearish candle pattern, possibly closer to the 42.9, then we'll do exactly the same thing. We draw on the fibs and see if the market could go lower. For now, not the case. Now the next question is, okay, so does it mean we're going to go up in a straight line? Of course not. So here on the hourly chart, we are working with a similar but different ascending channel as well. Last week, we finished with a doji that shows hesitation. And then we had a shooting star that shows us that the bulls tried to push higher, but didn't make it. They couldn't maintain their gains. So now this morning below 40.64, we are very likely to get a bearish signal, and that could then lead to the channel support here. We are getting a preliminary bearish signal on the stochastic, but nothing firm yet. Even if we get a correction lower this morning, I still think that the bulls have a good chance at continuing within the channel. And that's simply because trend and momentum tools are still really, really bullish. My bullish assessment would be undone if we move below the channel. Then we would also kick off a deeper correction on the daily chart. And exactly the same thing is happening for the NBP front season, but of course the details do differ a little bit. On the TTF front season, oh my God, what a treat! So the bulls are in charge. We are seeing that we have last Thursday and Friday 2 consecutive closes above the descending trend line. So the bulls are in charge. We also see that we closed above the 200-day exponential moving average. And I think the 39.40 area could be taken. So of course, this whole up leg could have been taken, or was for most traders, already traded on the intraday chart. Here we are working with this ascending channel as well. Here exactly the same story as on the TTF front month. We did end last Friday's session with this shooting star. So we would get a down leg below 39.13. Then we'll see how low it goes, maybe towards the channel support. But ultimately, bulls are still likely to continue for now with the evidence available to us because of the otherwise bullish tools. If we push lower, then we'll see a deeper correction also on the daily chart. But here's the thing, even with a correction, as long as the market bottoms out above 37.19, then we still are in the process of making higher troughs. So the market could still ultimately push higher. Here we do see the same sort of channel as on the TTF front month. Now, German power, also quite interesting because we did have a few patterns that were resolved there on the intraday chart. Here, I want to point your attention on the weekly chart towards this ascending triangle. And we can see from the weekly chart, we have had this strong bearish trend that bottomed out in the 67 area. And now since March, essentially, we have been pushing higher, but the peaks remained the same, the 2 peaks near 102. So that shows that the bulls are willing to push higher and higher and higher, but the bears are not willing to sell at lower prices, so we're kind of stable there. So this ascending triangle pattern is usually resolved to the upside eventually, and if we push above 102.8, then we could move to 131.11, because that's the ascending triangle target. Here's the thing, we're not going to get there in one go, so we definitely have to take, also the weekly chart is not tradable. We have to take what's happening on the hourly and daily chart. So here we are seeing that on the daily chart, the market has been moving into a tight range, which is the triangle on the hourly chart. But the triangle was resolved to the upside last Friday, giving us a target at let's do this again, giving us a target at 91. Then we have a look, okay, where's 91 on the daily chart? That is somewhere here. So this would lead us above the descending trend line. And by the way, this is called multi-time frame analysis. So the hourly chart is giving us an early indication that eventually we could move above the descending trend line, which would then give us a signal for the weekly chart to push towards this ascending triangle range or boundary at 102.8. So can you see how all these time frames are slotted into each other? Looking at the tools, we also see that they look reasonably bullish, except for this morning. So here's the kicker, all right? So as on the TTF and NBP, last Friday, the German power markets ended with a bearish shooting star candle. And yes, we would get a decline below 87.14, then we would get a weaker open. We might even push back into the triangle formation. But hey, as long as the market bottoms out above 85.65, like anywhere here, we would still get ultimately a flow of higher highs and higher lows. And then we could still push higher. Yes, If we push back below the triangle, the ascending, the triangle target at 91 would be invalidated, but the market would still be flowing higher overall. All right, and now the last one on the EUAs. Here the market is quite interesting as well. So first things first, the bears are in charge. That is undisputed. We are making new troughs on the weekly chart, and the next target is the 57.22. We are looking at the momentum tools, trend tools, oscillators. They're all showing us bearish, bearish, bearish. We also we also do have a bearish engulfing candle here after this like tiny up. I don't even want to call it an up leg, but the bears just simply continue here. As long as the daily chart remains below the trend line, I also see more losses. We did push below this supporting range near 62.45. So you can see we closed last week beneath that. Yes, with a doji, and a doji does mean the thinking or hesitation, but ultimately there's still more losses in the cards. Why do I think that? Because simply trend momentum, volume, volatility, oscillators, everything is pointing towards more downside. Haha, however, I am a little bit concerned about the falling wedge on the hourly chart. Now, here's the thing, and I will just show you my thinking process here. So ultimately, let's have a look. So we see that we are in a downtrend. So that is undisputed, like with the big swings, right? That's what we are seeing on the daily chart. But we're also seeing that falling wedges usually are eventually resolved to the upside. So, and I think that a falling wedge upside resolution at 62.57 would lead us to a smaller correction. But ultimately, I still think that the bears have a good chance at continuing. So the bears would simply continue, but but there is no zero bullish inclinations on the tools. Trend tools, oscillators, volume, everything is still pointing towards losses. So I am thinking this falling wedge might never lead to an upside correction, at least not in this constellation. So that's why I'm saying below 61.41, we are very likely to see more downside without any hint of an upside correction, and the bears would simply continue in line with the daily chart's downside targets. However, if we push above 62.57, we might see a little bit of an upside correction, and as long as we stay below this level, 62.57, we will continue lower immediately. We would get a more extensive upside correction if we push above 62.57, because this is also the most recent peak. All right, so that also means that this could lead to a little bit of a delay and immediate bearish continuation. No worries here for the bears. The occasional upside correction is completely normal, but ultimately, as long as we remain below the trend line, bears are still most likely to continue afterwards. All right, I hope you all enjoyed this. This was a quick run through what we can expect at the start of this week going forward. Everyone, if you do have any questions, let me know. Other than that, my name is Marcello Kolax. I am the Managing Director at Clever Markets. See you around and bye-bye.